traders, and what an amazing week we've just had in markets. So the big news this week obviously was the Federal Reserve, the Fed meeting, and the fact that the Fed cut rates for the first time in 4 years, and they cut rates aggressively by 50 basis points. Now, there was a touch confusion by the market how to actually trade that Fed cut. And the reason behind that is because the market started thinking that by the Fed actually cutting aggressively at the start of its rate cutting cycle by 50 basis points would mean that the Fed would have to maybe cut rates less by the time it finishes its rate cutting cycle next year. So the terminal rate for the Fed, or the base rate for the Fed when it stops cutting rate next year, instead of being below, say, 3%, would actually be above 3%. So that is why we saw that spike in US bond yields post that rate cut, and why we actually saw that we didn't see an aggressive sell-off in the US dollar as the market was anticipating. And dollar yen, for example, actually had a big rally on the back of that cut. So look, what does this mean for markets? Okay, so look, for trading for the US dollar, longer term, I don't think it actually it means too much. So that as the Fed does start its cutting cycle, and we see more cuts in November, December, and next year, the US dollar will trade lower. So the dollar index, which is sitting above 100 at the moment, will break 100, and early next year we probably will see the dollar index trading down towards 95. So selling the US dollar on rallies, going forward, certainly is the way to position yourself, and I'd imagine that that will be a good trade going forward. For equity markets, equity markets obviously are enjoying the rate cut. Equity markets, S&P's making record highs on a daily basis now. So equity markets are still pricing in the soft landing narrative. The only thing that might scare equity markets is obviously if we do see the US economy go into a recession, but we need bad data to confirm that. And at the moment, the data isn't actually showing that a recession is imminent. So yes, equity markets still are trending exceptionally well. Okay, so today on the risk event front, we do have a Bank of Japan meeting. Look, no one expects the Bank of Japan to actually do anything today, but Bank of Japan has actually been hawkish. Their policy rate is still lower at 0.25%. They have been talking that they will be hiking rates potentially up towards 1% over time. So as far as trading dollar yen's concerned, we do have a Fed that will be cutting rates. We've got a Bank of Japan that will be raising rates. So dollar yen will be trading lower. At some stage we will break 140, and I'd imagine early next year, we probably will be trading down towards 130. So look, with high confidence, dollar yen is a sell on rallies. I'd imagine anywhere up towards 143, 145 is the sell zone, and to target an initial break of 140. Anyway, look, I hope you have a good trade to end the week, and we'll check back in soon.